his point here. Historically, this company is quite hot. It's not a very long dated company. Means that have not been listed very long.
Yeah.
If you click it, it's like about 2 years plus. Let me check for you.
2018.
Okay, no. This one is based on 4-year cycle. The first year starting in was in September 2020. Is it? September. Yeah, September 2013. So we know now it's hitting a multi-year historical low lah.
Yeah.
The historical low is 644 lah. Now the price is what? 644.
780.
Now it's 812 now. Go up yesterday. Go up a taka.
Something like
So anyway, we don't particularly care about this one. So now the question is, you want to do a 5-year cycle trade or you want to do a 2-year cycle trade? How long you intend to hold?
For me, basically, whatever I make in crypto, I move it to shares. So when I buy,
Don't stay there too long. Okay, very dangerous.
if let's say I example, the last time I bought was $7. When it hit $21, I exited.
That means you are not long-term investing. You are called active investing.
Can hold long term, but I don't. The thing is, I don't sell all. So same with Apple. When I got in at 50, I don't sell everything. I sell enough to
Incrementally.
first
Sell
recover
enough to cover capital. and
recover
bottom.
capital. Correct.
So now in a way, I can recommend you I recommend you 3 different ways of doing it. One, buy the shares. Okay, most popular. Easier because buy shares is one thing good about shares. Share is maximum risk. What I call open risk. You buy the shares at $8.12, 1,000 shares, 8,100. But buy, I think definitely buy more than that because at the price of $8,000 per 1,000 shares, it's nothing. Okay. 2, you can do other derivative. Instead, you can do a combination. You can do what we call options. Okay, you can do options. Options are instead of buying the normal shares, you can buy options. Thomas, what's the option? Instead of spending $812 now, you can spend $2.30 and buy options. Give you the right to buy the share at $10 up to January 2024. So instead of buying the mother shares, then you can say, I put 50% of my $50,000 into options, because options unlike shares to double in value is very hard. Options to double in value is very easy. Okay, very easy to double value, especially if you got options that when you have the right to buy the shares up to January 2024, like 580 days away. That's another form of trading, another form of investing. 500, to be fair, it's not trading anymore. At 502 years plus, 562 days, 163, 582 days away, it's not trading really. Technically, it's called investment substitutions. That's one way about it. So these are the 2 most direct ways. Thomas, I'm interested in long-term investment, but I want to get discounted price. Fine, you can sell options at this price here. You get discounted. See, now you buy the shares is $8.12. Okay, now you say I want to buy the shares at $9. Okay, now I want to buy the shares now. If you do this trade here, you have a discount of what, $7.88. Mean 100 shares will cost you, if this sell naked puts to get the shares, you will cost you, the buy-in price is $7.82. Which one is better? All can be done concurrently. What's the objective? This method is good for what? Acquiring shares at discount. Current market price now is $8.12. If you sell a put, okay, you are prepared to buy, you are buying the shares, you got signed shares, you buy in shares at $7.82. Thomas, what happened if the market go up? No problem. You will get a credit of $1.80. Let's say now you can't, then my price go up and you cannot get the shares in. You cannot get the shares because nobody. If let's say go up to $10, nobody want to. You definitely don't want to buy the shares. Nobody will sell you the shares at $9 back. Yeah. But you still got money. How much money you collected from this trade? If the market refuse to give you the price, what you can do now is that, let's show you for learning purpose. You have a profit of $1.18. If you're not assigned shares, you have a profit of $1.18. $1.18. Your maximum, if by buying shares, worst case, if the company go to zero, you lose 700. Maximum loss, you see now. Worst case, what's the maximum loss? Company goes zero.
782.
782. Okay. So basically, this trade, even you don't get the shares, you get 15% credit for holding this trade, for preparing to buy for preparing to buy, for preparing to buy the shares at $782, and market refuse to let you buy at $720. You get $118 credit for your how many days, for your so it's 15 on July, for 29 days you get credit of 15% return over your maximum loss if the company goes zero. $789, no, $782. So you can buy the shares, buy options to substitute your shares, and sell options.
Sorry, when you said sell the put, right? And if let's say the not fulfilled, I still get this.
Let's say now you sell a put, that means that the buyer of the $9 put can sell the shares you at $9. Okay? So what happens if the thing go up to $10? The buyer of the put want to sell you this $9? No.
Okay.
So but don't worry so much. You already collect $118 from him already, your pocket liao lor. What happened, Thomas? What happened you drop to 750? Don't mind. Even if you drop to 750, don't mind. You still get the buyer, the seller will sell you at $9, but you collected $1.18, $118 upfront. What is your maximum loss? It means your buy-in price 782. So these are some of the ways I can tell you what to do. This is nickel put selling. For people who buy the shares. You can do combination of all three. Thomas, my budget is Ba Cheng or Kotak Cheng. Then we can sort out into here. So you have the flexibility of buying shares, buying options. Options to double in value is easy. Okay, anyway, let's start with Nick. Sell options to buy shares. Understand so far?
A little bit.
Okay, don't mind. It can be very simple. Okay, it can be complicated. Okay, it's the problem you do not understand options at all.
Yeah, correct.
These are things. Just imagine how much money you can save. If the thing drop to 750, you buy a shares at $8.12 now. The thing drops 750. The market will, the buyer, you will get shares, 100 shares, because the thing dropped below your $9. But what's the buying price? Your buying price is $7.82. You buy the shares now at $8.12. And if the market go above $9, you get 15%. You get $118 belong to you already. Your return, what's the return rate? 15% per month.
But the option got a date, right? It's not.
These options want to be sooner the better because you're selling.
Yeah.
The buyers are worried about that.
You want it to close faster.
Don't care because you prepare to buy the shares at first place.
Yeah.
Now is by selling this put, you have a discounted price. The market price now how much? This current market price now is $8.12. If you sell this one, your buy-in price is what? The buy-in price is your maximum loss $7.82. Which one better? Buy the shares now at $8.12, or you sell a put. Collect. In worst case, you got shares you want to hold, but you should buy at $7.80. Which one better? Depends on you.
I understand what you're saying now. So instead of buying directly, buy the shares directly. Sell this option.
If the market make you high, don't mind. You collect 15%. 15% in 29 days. You think shares so easy to get 15% in 29 days? I mean, it's not I say 118 divided by 728. You mean so it's called selling puts.
This is one for 100 unit, right?
All options for shares and indexes with 100 units. And not only that, Thomas, let me show you this one objective. Another objective, instead of buying the shares, you can buy options. Look carefully. For you to double your money, simple. You buy the shares. 100 shares, correct? will cost you $8.12. So for you to double your money, you must go to $16.38.
Yeah.
Okay? If you go and buy this option here, for you to double your money, you must go how much, you know? You must go above how much, you know? If the market price from $10, from now $8 go to $15, you double your money, 100% return a year.
Mm.
How I know how 100%? You have the right to buy the shares at $10.
Mm.
If the market go to $15, you have the right to buy your shares at $10. Your option must go $5 or more. How much you buy this share now? How much you buy this option?
239.
239. Is it more than double your money?
Mm.
Which one easier to make money? Which one less capital risk? Risk less, lose less, higher returns, and faster also. Shares, options. Depends. If you want to buy for 10 years, then option not so good lah.
Mm.
If you buy for 1-2 years, this one better low. For the same $8, you can buy three of these.
Mm.
Okay, Bob? Oh God, one thing good. This one thing bad got time decay lah. But if you do this here, if you buy here, and sell here, can you not offset? I think you know the saying options time decay.
I'm not sure because
Yeah,
I don't really do.
I know,
options.
but I explain to you. So we can do a combination of all three together.
Mm.
Depends how big your account, how much your Thomas. I prepared to commit $50,000. $50,000 okay let's say $50,000 Close the door please. Get me noisy recording. Okay. Now $50,000 let's say you don't commit $50,000 example let's say buying price is $8.15 $8.12 you can buy 6,000 over shares Can you not do a basket of 50% shares 30% options here 30% sell options there cannot So Chinese say risk less lose less make more in terms of percentage returns. Okay, one thing bad about the options versus shares. Options got lifespan. Shares perpetuity. But in return, what's the good thing about options? 100% nothing. Okay, if for example, let's say now you're right, the company go up to $16.40. Hell, this one easily makes $600 over. Why? You have the right to buy a shares at $10. Market is now trading $16.40. So your option must worth at least $6.40. Hell, 8%. So you can double your money using shares. But if you use shares to double your money, options are 300% return. To 300% return. In some cases 500% return. Depends what price you buy. Because this one because it's so cheap. No choice. Options got certain good thing, bad thing. So you can do for your account size. Let's say how much you can put in? 5 figures, 6 figures. This is a better way of doing it. After all, I think you're full-time trader, correct? You spend at least 2-3 hours a week looking at the markets, correct? Or more.
Early in the morning only lah. After that I don't know already.
For this one half an hour after market open, once a week can already. Because your style, you're not active trader. So today okay, maybe say first Friday of the month and third Friday of the month, half an hour, 1 hour, and half an hour more enough lah, because your style is long-term investing style. That's why I say you are managing your risk. So Thomas, I want to buy 20,000 shares. Instead of buying shares, I want to buy enough options to substitute for the shares. How many shares? How many options must I buy? At what option to buy? At what price I want to buy? Can we substitute a thing? This one trading. We use options. Technically, is what I call fixed risk trading. When you buy a shares or sell a shares, it's open risk. Okay, Thomas, shares sure good now. Okay, for me, look at it. We buy option here. You can read the profit. What's the profit here? It's the same. If it didn't go to $1,000, you make $990 because you right to buy at $10. Of course, you go to $100, you have right to buy at $10. Your physical, what I call physical intrinsic profit must be $90 or more.
Mm.
Okay? You're using which broker now?
Oh, I'm using Philips and Momo.
Okay. I think Momo can do this one. So this one can do Momo. Okay.
I tried to look at it, but very confusing, so I gave up.
No.
The options part.
Sorry, you need to learn a class. Okay? You need to learn a class. Okay? I purposely designed strategies to suit because not many people can follow me.
Mm.
You see, in one shot, I recommend 3 different ways to make money.
Mm.
Everyone got good and bad, ugly.
Mm.
If you capital, low capital, I want to suppose I prepare to lose $10,000 for each trade. So I buy $10,000 shares.
Mm.
Or I double, I bet 20,000 because if you lose 50%, I get out. Then when you take 10,000, go and buy options. For $10,000, how many options can buy here now?
Because it only costs $239.
Yeah. Worst case, how much you lose? $239. You mean if it drops to 0, $239? But you got 582 days away there. $582 is it long or short? Come on, man. If you cannot make 50% and cover your partial take profit, after 562 days away, that means your original projection salah lo, totally wrong. So that's why I think you trader. That's why not many people ask for help that way. I teach you 3 different ways to make money really. No, 3 different ways to trade your objective. Thomas, I want to do short-term trading are different. Thomas, I want to do buy and sell for this Friday night, also different. And somebody said my account got changed, somebody said my account sapa, but different also. What's the objective? Then what's the objective? And then followed by your risk capital and your objective, risk capital and your duration. And from there we can structure a trade. To me, all strategies sure make money one. Because if you lose money, make money come from who? Somebody else. No such thing as market money. Market money is somebody money.
Correct.
Most people say, I market low, no matter this method work. For every buyer, there must be a seller.
Correct. Yes.
People don't mindset, people say, I just use the method, sure make money method. Don't be like that. If sure make money one, then
very interesting, but thank you for explaining, but I still...
Yeah?
Need to make a move. I see you again.
Yeah.
Bye-bye.
We follow our meeting.
Yes, good.
I didn't fully catch all of it, but I understand what you're trying to say.
My job is not to teach you what to do. My job is to say, open your eyes, open your mind. Okay. Look at other opportunities. So a lot of people say, I don't mind. I put in I buy 10,000 shares at $80 or $8 and 12 put up chain or then I put $2 cut loss. Quite common. But it's a good idea or not? If you put a $2 cut loss, I'll go and buy 20,000 shares. Okay, you buy 10,000 shares, you must not take the $20,000 buy options equivalent safer. So you basically this method I call you stop loss money, your cut loss money. Safer, correct? You don't worry about too much. Why you put stop loss? Why you put stop loss or cut loss by using the capital you prepare to lose in the first place? And since you got this type of thing inside, you got more flexibility. You can hold longer. You can write the game plan. More options available. If not, it's just I buy $8. I put $6. I cut loss. You see me? So there's so many ways of doing it. I just showing. My job is not teach you how to trade. If you know how to trade, I say good for you. If you don't know how to trade, I don't mind. Not my job. My passion now, my mission now is to Chinese say, open your eyes, open your mind. That means that. So this one works up. I bet you know. So how long you buy? What's the budget? You work out the numbers. Because shares options will never be more expensive than shares.
Because the cost is fixed there.
Yeah lah. You cannot tell me option is more expensive than share value. You got this lubang, tell me. I will teach you how to Chinese say 包价 one, sure make money one. If got options can make money, you can sell for more money than the share value But Chinese say 做梦. It's dream because market won't happen with. You cannot be selling. Say Thomas, I sell options. I can collect $10. Share price $8. Who want to give you $10 when the share you can buy minor share directly? So this one thing. So options is something unique that compared to shares, because if for two type of people, one, people who got small account, two, people who want to maximize return. You know what maximize options 100% is nothing. This type of long dated options generally 3, 4, 5, 600% every day. I got students who want 2 years 13,000, 14,000% return. That's why he buy 能整咯. Okay. By the way, you can, because your account size is big enough and can do something more creative, you can do even more funny stuff. Okay, you can knock short from here, go down. Because a lot of people don't understand the market risk is very horrible today. So shares is very dangerous. Just imagine you go and buy bottom fishing, go buy at $22. You still top C call. Top C call, how many options can you buy for? And not buying short term options. We're talking about January 2024. That's why I say options let you enable to, for your case, empower you, risk less, make many times more money than you should trade shares. Okay? I say now got Apple example. Let's say we go back 5 years 4 years example, let's say now you go and buy option, let's go and buy a 50. Let's say over here now 1 year plus 2 years ago, 2.5 years plus, you go and buy options go and buy buy 2 years ago, you go and buy options at $80. Hey Fred, do you know how much money you make now? No? 80, buy share options, you buy options, call option at $80, means like you give it right to buy Apple share at $80. Hit the high of 180, 182 That means your options are easily worth $80. You think you pay $80 for this option? No. Even you buy $80 option you're still holding you still net $56 and you still guarantee you still make money. So end of the day, options enable you to empower your trading, your investing portfolio, active investing. Anything less than 3 years they call active investing, returns while minimize your capital risk. Okay? Of course you want to hold for 5 years, 10 years, then option not so good. Options is good for implementation. So as a trader, you need to have all different tools. Cannot be buy shares and short shares and Okay? Any questions?
Currently no.
Okay. So
we
you
need to
drop me a message. Okay. I'll be launching directional class soon. If you want to, the first class I launch is not suitable for you because your capital risk 很大. The next upcoming class is for people with 510K account size. For your case, you need to take the advanced value one. I got strategies that when you buy, let you do a bullish long-term trade or 1-2 year cycle at 10%, 15%, 25% of share value. Let's say, tell me which company you are bullish now. Tell me what company. I'll show you an example.
which company?
Any company you feel like bottom fishing. Alibaba?
Rolls Royce.
Huh?
Rolls Royce.
Rolls Royce not listed in America.
That one is London, yes. BA
BA can. BA 涨 won't say because let's be honest, there's no competition in the market.
Yeah.
BA now is hitting the all-time low here. So let's say for learning purpose, you are going to do a long-term bullish trade on our good friend Boeing. Boeing historically the low, you can see the chart pattern here.
Yeah.
So as far as I see, aeroplane won't die one. Let's be honest, whole world only got two area. China and Russia one we don't say the one airplane Boeing and Airbus. These two. Between Boeing and Airbus, I'll take Boeing. Because why? I can sell options. I can play options. Okay, let's go to Boeing. We know Boeing is not cheap. $100. Okay, cheap and expensive is subjective. So now Boeing now say, Thomas, I want to enter a bullish trade on Boeing. My cut loss for this trade, I prepared to risk 25% of the share value. I want to hold for 1 year plus 2 year cycle. Reasonable lah. Because you hold for 1 year plus, you cannot be putting a $5 stop loss, correct? You do based on your character, I don't think you put stop loss, correct?
No.
You do cut loss
Just hold lah.
Okay, you put cut loss Look carefully. To buy this option, I give right to buy the share at $140. Or okay, make it $135 lah. Make it $135 lah. You have the right to buy the share at $135. Okay, cost you $35. 20%, 20%, 30%. Depends on you. Thomas, I want to reach 8,000 or got 10,000. Thomas, I want to reach $35,000. Then buy 10 contract of this. You can do that. Example, the investing. I'm not sure what type of style using. There's one type of investing is what they call share-based investing, means number of shares. Another is called budget-based investing. Okay, what I mean by budget-based investing? Thomas, I want to invest $35,000 in Apple share, Boeing shares. So $35,000 is your capital. So what's the share price is 100 and make $134. You can buy up to $261 shares. Correct. Okay, this is one form of it. Thomas, this is your, after all, your $35,000 is your risk. Okay, and in some cases you take $35,000 now here. Okay, now $35,000 here, correct? So you right click here. What is the cost of the trade? Is 3,500. Okay, 3,500. So you got 3,500, correct? So your $35,000 here. Give me a minute, make it right here. Your $35,000, one contract is 3,500, correct? Oh, too many already. It's 10 contracts. 10 contracts also the same to $35,000. Your $35,000 is your prepare to cut loss. 準備輸就國清. And which one easier to double money? To double your money for this Boeing, how much must go up? You must double the price to what? Double the price to $267 around that and 40 cents. But for you to double your money, how much? For you must go how much? You must go to how much? Double money, how much you go must go up? You must go up to times $270. You must go to $205. Which one easier to achieve?
So you are saying this option to buy at 135 only costs 35.
Yes. By the way, it's expensive lah. Okay, from my personal point of perspective, we can discuss. This is factually accurate. Is it the best price? We can discuss later. Because if early explanation you Chinese it a bit 60-70% only, I don't need to explain too much depth. Because okay, this one can be very creative and very powerful. Let's say $35. Which one you risk? You want to risk $133?
For how long? Until January 2004.
Yeah, lor.
This 170.
Yeah, lor. This $35. This 135 call means that you have the right to buy Boeing shares at $135. So when to double your money using options or triple your money using options versus shares is not easy to double or triple the money. Even they can double triple money, options will make more returns because why your capital is such a call. Your share is 133. Okay? So this trading is quite interesting. You can use it as a substitution. Of course, if you want to buy for your grandchildren education fund then for the soon and then this is definitely not. Buy options bad. Buy shares good. And then I will tell you off. Don't buy shares. Why? Company will go up. I see companies from Sapa call drop to Tokwi call. So if you want to go for 15-20 years options, 15-20 year cycle or whatever, it's best to buy ETF. Because why? 500 S&P 500 companies. Nasdaq 100 companies. So even 5 companies die also no problem. And anyway, one thing good about index ETF index they kill every Nasdaq 100 every 1 year they change. Okay, S&P 500 every 3 months they can change. So all the worst company all kick out. They bring all the best company in. So market will go up, market will go down. Long term the ETF will go up. Index ETF will go up. Shares I don't say because I see a lot of companies already. I ever short company from Tandoori. Okay? These are just alternative things available to you.
Understood.
So jump now because you are what you are. So this is my passion and mission. So I don't run it as a business, unfortunately. I should run it as a business. The lady up front is trying to convert my business, trying to convert what I'm doing into more business like. Okay? Cannot be 1 year 15 students only. Now, I can for myself, I can because I know this is not my main focus, not my main rice bowl, whatever. But if I want to bring my 第二代、第三代 I must bring it such a way that everybody to attract youngsters come in means what? Must be a viable route for them to grow. If means what? 你後生咧，唔使乜冷啊，一個月賺5,000塊夠無夠了，對不？對不？2,300塊美金5,000塊就夠無夠。Okay, you make it to ban now. 唔知快樂開落幾多 but at our age our expenses should be not that high lah. Questions?
No.
I send you the link.
Yeah, can.
So this is like investing versus trading. So investing is which one bad? Nothing. All that can. So what's your objective? Your objective hold for 10 years then share is better lah. Then I'll ask you a question. Why you choose this share? Is it part of a portfolio of 50 shares? If you take Thomas, I like Boeing very much. I like Facebook very much. I like Starbucks very much. I like Tesla very much. I put my money inside. I told long I beg you don't do that. So if you say I got a portfolio of 50 shares or 30 companies then this buying shares for 5, 10, 20, 15 years is valid. If you want to put most of your money into 2 or 3 shares underlying then don't do ETF. Safer. At least I guarantee you don't need micromanagement, and based on your character you're not going to monitor